everyone to Sonoma Brain Trust. I am Chelsie Runnings with Better Homes and Gardens Real Estate here in Sonoma, and I have my lovely co-hosts, Mary Piasta with Haeuser, Valluzzo, and Piasta, and Darren Blonski with Sonoma Wealth Advisors. We haven't seen you guys for 2 weeks, I think, and now that we're into the new year, it started off with a bang, literally. 2021 till 2020 to hold my beer, and yesterday all kinds of chaos kicked off, and so we're going to jump into what's going on in our markets and how things are reacting. So I'm going to start with some real estate updates. We started this year with another very low interest rate of 2.65%. So that is another historic low. Last year we hit at least 12 times we hit historic lows, and we started the year off with historic lows. It'll be interesting to see how yesterday's chaos is going to affect our mortgage rates, if at all. Buyer demand, it's cooled down a little bit. We've gone from boiling to just very hot, whether that's because of the economy, the stimulus talks, or holidays, or just a seasonal, slowdown. Who's to say, but the buyers are still out there, and with these incredibly low interest rates, the buying power is more than ever before. So we will continue to see incredible buyer demand and more sales this year than even last year. So that's it for real estate. Not much has changed other than it's moving full speed ahead, and I will keep a watch on how those interest rates react to yesterday's chaos. But in the meantime, Darren, I know the markets like stability, but what are we seeing from yesterday's mayhem?
Well, if Bitcoin's any indication today of what you're seeing from that mayhem, we saw Bitcoin break the $40,000 per coin here this morning. So if that's not a reaction to people feeling unstable in the current political environment, I'm not sure what is. But I will say overall, given the shenanigans, at best, I guess we can call them that, of yesterday, and if not, we can call it outright sedition. But the markets in general did very well. They were doing even better before the shenanigans started. And what you see on your screen is the Bitcoin price. And you can see we took out the $40,000 mark here today and then quickly sold off, and it's recovering right now. That $40,000 mark was a big psychological spot. So that's just, I think, an important backdrop of what's going on out there. There's a lot of questions and concerns with the money printing, with the Democrats taking the Senate yesterday. People were even more concerned that there might be too much money printing, perhaps, but also very excited in the markets because that money is likely to flow into the markets in one form or fashion. So one of the big moves you saw, speaking of rates in real estate, Chelsie, you saw the 10-year note yesterday. You can see this jump up. So this was Friday's close here at 96 basis points, and we are right at 107 today. So we just leaped and galloped up past that 100 basis points mark, which is an important resistance point on the chart. So quite the move in rates yesterday. That could impact mortgage interest rates. It could slow down refinancing, right? Because the rates might not be as promising. That could have an impact on the real estate market. But in general, I would say that there's such a limited supply, like you were saying, that demand should still stay intact. You can't really talk about the markets unless you talk about the dollar. And this is a really big, important story because a lot of people, after they went through COVID, took a lot of cash, put it in their bank, and they're just sitting on dollars. And the challenge with that is you have a government that is actively working to devalue the US dollar. In addition, you've got the very real possibility that we're approaching and seeing inflation. We talk all about this on the economy channel. If you just type in Sonoma Wealth Advisors in YouTube, you can find a whole lot more video on this topic. But if you're just sitting on cash, that could be problematic. Why? Because the dollar is being devalued at the same time we're seeing inflation. And that could ultimately end up creating a drawdown in your cash. So your $100,000 sitting in the bank you think's worth $100,000. Well, guess what? Maybe a year from now, it's worth a lot less just because of those two factors alone. But what we do see is this negative correlation between the dollar and the S&P 500. So the S&P 500 is the largest 500 US-based stocks. This is a chart. This was the COVID move, and you can see where we're at now, quite the recovery, unexpected by many out there. And we're right tapping on all-time highs today. So with the confirmation of the electoral vote last night, the market's got certainty on its wings right now, and it's certainly feeling that, and you're seeing that come throughout the market. If you look at other parts of the market, like QQQs, which are the .com, the technology side, which had just an astronomical year last year, you can see they're starting to see some strength after some weakness. IWM, which is your smaller companies, this was really the big mover yesterday during that whole shenanigan scene. You can see that's just a huge move in IWM, which is the Russell 2000. So these are your smaller companies out there. These are the ones that are impacted by COVID more than the larger companies. The reason they're doing so well is because you've got a huge potentiality with the Democrats taking Senate that we're going to see some large stimulus packages that will work their way into the smaller companies across the board. So we saw those moves yesterday. That is just really, it's hard to even compare that move to what we've seen in recent past. And I'll just look at two other items here. This is energy sector. So you can see it's a very different chart. This was COVID here, and this is how energy's performed. Just recently after the election, energy's really taken off and done well. And it's kind of counterintuitive, because you would think if Biden and the Democrats win, you would think all the oil companies would get beat up. But actually, we found that they did better during the Obama administration than they did during the Trump administration. And that's because supply is likely to get constrained with regulations. They're likely to be able to make and do more and be more profitable. And then you look at finance. So finance is, you can see since the election has really moved strong and up, and we've seen quite the recovery coming out of the financial side. And that's interesting because interest rates are still rather low. But if interest rates go up like we saw yesterday, you get these big green candles, because that creates a bigger spread for banks to make money. So that's a little bit in the weeds, but generally I would say the markets are pretty happy with the certainty we're seeing. They're pretty happy with the outcome, and for the most part, just didn't even blink an eye at yesterday's mess.
Well,
So,
speaking of what can we expect, what can we expect to come from yesterday? I mean, I hear a lot of talk of invoking the 25th, and it's still kind of hard to wrap my mind around everything that happened yesterday, but do you have any insight on what we can expect, or what's happening in the legal world?
Yeah, I think that as the markets are showing certainty, which is fantastic, the legal world is trying to grab onto the certainty of our historic legal roots, which are foundational documents. People are looking at the Constitution as to see whether the 25th will be invoked. Others are talking about the Supreme Court maybe invoking some type of review, although that would take a longer amount of time. So I think that as we sit here and we wonder about our country, we have to keep an eye on the fact that we are grounded in the constitutional framework and that we have. So it will be a really dynamic time to see what happens, a sad time too. I don't know about you guys, but I had a friend call me this morning who's out of the country, and she was remarking on the news there and, how this is really a big embarrassment for her, an American abroad. So, there is some sadness internationally too. But I think going forward, this is 2021, and hey, it's going to be better, right? So on that note, there are quite a few laws that rolled into place with the advent of January 1st. Some that are on the minds of businesses locally are the minimum wage increases that start not only at the state, but also can be different regionally. So folks are looking at their locality for that. Here in the heart of Sonoma, that's been a big issue for some employers who have decided to decrease their workforces to fall under a lower wage threshold. So we'll see how that impacts business and the employment market long term. Also, businesses in general, as we roll into this year, are mindful of new COVID protocols that have been put into place. There are specific COVID rules and notices pertinent to OSHA requirements, and they are quite extensive for various employers. So, savvy employers who are looking to be mindful of these things and as they reopen need to reach their employment law counsel to make sure that their policies are complying with the 2021 requirements. Those notices are actually being challenged in court. So there's another one of our foundational American organizations that we'll get to see how this plays out long term. But for the short term, again, people should be mindful of the new notices. There's also good news with our legal developments, and that is that the AB5, which had a bunch of publicity last year, has been loosened a bit. And specifically what that means is that we will have more opportunities for independent contractors in certain situations as the world opens up more in California. And then, of course, lastly, there's a topic that's near and dear to our Sonoma Brain Trust heart of Prop 19, which we've been jamming about for a while here. It goes into effect in mid-February. We have videos posted on it, and we are happy to answer questions in an informational way, but please do not rely on us for anything that we say in our videos because these are all informational in nature. And we will be circling back on that topic in the future. So how's that, guys, for the legal landscape of what's going on?
Mouthful, to say the least.
Right?
They're just,
it's
where do you even start?
There's so much that's already started this year, you guys. Too much to even grasp.
Not to mention that the COVID cases are just absolutely out of control right now. I heard from a nurse over in Walnut Creek yesterday that they pulled all her oncology doctors and they're not doing any oncology treatments because all the doctors need to be working with COVID patients. I mean, let's just take that, right? So it's too bad we can't just say, it's 2020.
It's 2021.
Yeah.
No, very different things that are going on.
So let's talk about what we're looking at. What are we looking at for this year? I mean, I think that's what people are looking for is kind of some sense of, okay, what next and how are we going to navigate how we're going? I mean, through this year, that's what question I get asked. Well, Darren, what are the markets going to do? Like, I don't know what the market's going to do. There's no crystal ball here. But I can tell you that, it's very clear with the Senate being taken by the Democrats yesterday, that we're going to see a lot more stimulus. And I think that's going to impact all facets of the economy, including like what you were talking about, Mary, with the smaller employers that are struggling with the minimum wage requirements, with these AB5 issues. I'm glad to hear that California's loosening up on AB5.
I know in the real estate world, we are expecting to see more sales than we've seen since 2006. Even if interest rates do go up, even if they go up to 3.5%, they're still incredibly low, and the buying power is still so insane that somebody who was buying a $600,000 house last year is likely to save a few $100s at those lower interest rates this year. So, and I know that people are thinking that there might be a housing crash coming, and like you said, Darren, we don't have a crystal ball, so we can't know for sure. But looking at the numbers and looking at what economists and experts have to say, a housing crash is highly unlikely right now. The appreciation in real estate continues to climb as the buyer demand and competition stays stiff. So, don't expect a housing crash to come this year. If anything, expect to see more buyers out there, more real estate sales. One thing that happened last year that was really interesting that I guess maybe doesn't come as so much of a surprise is the migration of people in and out of California. The population growth that we saw in California was due to births. It wasn't due to people moving into California. Far more people left California than they actually came into California. So that's a that's an issue that has to do with the lack of housing and the high taxes. And, you know, it's a big kind of nest of problems, but we are seeing people leave California at record numbers right now.
Yes, but we're also seeing people relocate here. I'm getting calls for folks wanting to do off-market property transactions, purchase, you know, to get their feet here. And so that's really interesting to see too. And I think what it shows is that people are getting creative. They're realizing that they can work from other places. They're redesigning their businesses to comply with all the different protocols and rules, laws, regulations that are coming out at them. And so I think this is going to be a really dynamic year as we go through it, to watch and be a part of what happens.
Well, I think it's a continuation of the change, right? When we go through crisis, what we find is that changes that were already starting get expedited and enhanced. And I think that's what you're going to see more of. To your point, Chelsie, on foreclosures, I agree with you. I don't think there's going to be a housing crisis anytime soon, especially now that the Democrats control the Senate. You're going to get this moratorium on foreclosures continue, right? Whereas that was at risk perhaps by a Republican Senate that wouldn't continue that moratorium. I don't see the Democrats lifting that moratorium anytime soon. And you'd really have to have that lifted to have the foreclosures happen to let the bottom fall out of the real estate market. That's not going to happen now. So I think that's probably, I mean, we can't say it's not because we never know, but it's very, very unlikely at this juncture that actually becomes a concern. I mean, I think if anything right now, the tailwinds are behind the markets in the real estate market. The tailwinds are behind the stock market. I think if anything, what we see in 2021, we see inflation, and we see a lot of it. And you're starting to see parts of it, even though the government hasn't really said that yet. If you look at the commodity, here's the Wisdom Tree Enhanced Commodity Strategy Fund. This is a commodity index fund. And what I see is a trend upwards. And those are commodities, right? So if commodities are going to go up, they're going to lead the way. And then on an anecdotal level, every time I walk into Safeway or another store, it seems like the apples are always $2 more expensive. So like you see it happening out there. It'll be interesting to see when the government reports it. Well, what else? Anything else for today on Sonoma Brain Trust? I think it almost feels like there's so much, I don't even know which angle to go at. Like that's that feeling that yesterday brought to me anyway.
I agree. I think people are tapped out right now, so we have to keep our video to a certain amount of minutes that our viewers will want to watch, or they're going to be like, guys, shut up, go away right now.
And pause, right?
Moving on.
Well, I guess maybe it is if people have questions, they can comment on our videos, and we're going to start this year by launching a question answer series on brain trust for informational purposes only. So if you have questions for us, absolutely weigh in, and make sure to like and subscribe to our channel.
And make sure you share our video with anyone you think might find our videos interesting or useful. That's what we're here for. Facts over fears, guys.